Welcome back to the QuickBooks Wizard Podcast. I'm Brian Cogan, your host, and the guy who spent more than 20 years helping business owners fight through chaos of their books, wrestle QuickBooks into submission, and finally get numbers they can actually trust. Now, if you've listened before, you know I like to keep this real. I don't care about throwing a bunch of textbook jargon at you. I care about making you actually get what's going on in your books. Because when you do, you make better decisions, sleep better at night, and run your business with a whole lot more confidence. And today we're stepping into one of the most misunderstood and honestly one of the most feared parts of bookkeeping, cash versus accrual. Now, maybe you've heard these words before. Maybe your tax preparer asked you which method you use. Maybe you pulled two different reports in QuickBooks and thought, wait a second, these don't even match. What's going on here? Or maybe you've been told, stick with cash, it's easier. Or maybe you've heard someone else insist, no, you have to be on accrual. That's the only way to know your real numbers. Either way, if you've ever felt confused, you're not alone. Cash versus accrual is the monster under the bed for so many business owners. I can't tell you how many times I've had people come to me convinced QuickBooks is broken because they run one report on cash and another on accrual and get completely different results. And when that happens, they start to lose trust in the system. But here's the truth. QuickBooks isn't broken. Your books aren't lying to you. What's really happening is you're seeing two different faces of the same monster. Now, if you've been following along with this show, you know I like to explain things in a way that's a little different. Numbers are dry. Monsters are fun. And honestly, I think the monsters explain the reality better than a stack of accounting textbooks ever could. So today, I want to introduce you to one of the strangest, most confusing creatures in our little wizard universe. She's tricky, she's dramatic, and she loves nothing more than watching business owners argue with themselves over what's really true. Her name is Accruelia, the monster with two faces. On one side, she's bright and bubbly, all smiles and laughter, cheering you on and telling you you're rich. Look at all that cash. Life is good. And on the other side, she's serious, even a little harsh, pointing her finger and saying, not so fast. You may feel rich, but you've got debts, promises, and obligations. The truth is a lot heavier than you think. And here's the thing. Both sides are right. That's the crazy making part. Both sides are telling the truth, and both sides can completely change how you see your business. That's what today's episode is about. By the time we're done, you'll not only understand what cash versus accrual means, you know exactly why your numbers sometimes don't match, and how to use each method to your advantage, and how to stop Accruelia from confusing you. Because the goal isn't to kill the monster. You can't. She's always going to be there. The goal is to understand her, to know which face you're looking at, and to make decisions with confidence. Now, I know some of you listening today are numbers people. You like detail. You like explanations. And some of you, you'd rather chew glass than sit through an accounting lecture. Don't worry. We're going to make this fun. You'll learn something new, and you might even laugh along the way. So buckle up, grab your ledger, and just sit back and relax. By the end of this, cash versus accrual won't feel like two foreign languages anymore. It'll feel like a story you finally understand. And now it's time to bring in our old friend the wizard, because no episode would be complete without him setting the stage.
Two merchants, two ledgers. One cries riches, the other ruin. Both true, for they face Accruelia, the monster with two faces.
Oh, darling, look, gold in hand. We're rolling in riches tonight.
Riches? Lies. The work was done last month. The debt still lingers. You celebrate too soon.
All right, let's start with the basics, because if you don't have the foundation, the examples later won't make sense. Cash basis is simple. You only count the money when it moves. If you get paid today, you recognize income today. If you write a check today, you recognize the expense today. That's it. No check, no income, no payment, no expense. Accrual basis looks at it differently. It doesn't care when the money moves. It cares when the work is done or the obligation is created. You send an invoice, that counts as income right then, whether or not the client pays today, next month, or 3 months from now. You get a bill from a vendor, that counts as an expense, even if you don't actually pay it until later. Now, why does this matter? Because depending on which method you're using, your books can tell two totally different stories about the same exact business.
Cash is the jingle in your pocket. Accrual is the shadow of the promise behind it.
See? Same kingdom, two truths. Confuse them and I win.
So November looks empty, December looks empty, and then in January, you suddenly look like you're rolling in money. Accrual basis says no. You did the work in December. That's when you earned it. So the income belongs there. Now, which picture is right? Both. Cash is right if you want to know when you actually have money in your hand. Accrual is right if you want to know when you earn the money. Same business, two truths. Let's change it up. Say you run a software company. You sell an annual subscription in January for $1,200. On cash, that's all January income, one giant spike and then 11 months of nothing. On accrual, that $1,200 gets divided across the whole year, $100 a month. So instead of feast and famine, you get a steady stream. If you're looking at cash, you'll think January was the best month ever and March was a disaster. If you're looking at accrual, you'll see consistency. And here's another. You're a restaurant supplier. You deliver $3,000 worth of produce in March, but the restaurant doesn't pay until April. Cash basis says you made nothing in March and $3,000 in April. Accrual says you made $3,000 in March because that's when the work was done. Which one do you think lines up better if you're trying to figure out whether March was a good month? Probably accrual, but which one helps you know whether you can cut a check in April without bouncing it? Cash. Neither method is wrong. They just answer different questions. The problem is most business owners don't even know which question they're asking when they look at the reports. They see the numbers, they panic, and they start to think QuickBooks is lying to them. But QuickBooks isn't lying. It's just showing you whichever face of Accruelia you've told it to show. And that's the key. You need to know which lens you're looking through. Are you asking, do I have money right now to spend? That's a cash question. Or are you asking, how much work did I actually do this month, whether or not I've been paid yet? That's an accrual question. If you don't know which one you're using, you'll make decisions that don't match reality. And here's where I see people get tripped up. They'll use cash basis for their taxes, which is fine. And honestly, for many small businesses, perfectly legal and perfectly simple. But then they'll also want to know how much they're doing month to month. If they look at cash, they might think, wow, I had a terrible March. But in reality, they worked their tails off in March, invoiced thousands, and just haven't collected yet. Cash made them feel poor when they were actually doing really well. Flip side, I've seen folks living in the accrual world who think they're rich because their reports show all this revenue they earned, but their bank account is bone dry. They've got receivables sitting out there that they may or may not ever collect. The accrual face told them they were flush, but cash reminded them they couldn't make payroll. That's why you can't just blindly trust one side of the monster. You need to know when to look at cash, when to look at accrual, and how to reconcile the two in your head. Once you do, Accruelia will stop being scary. She's not tricking you anymore. She's giving you two different ways to understand the same story, and that's powerful.
Confusion is her banquet, but history shows us how she feasts and how she can be tamed. Long ago, in the village of Golden Brook, the air was thick with anticipation. Winter was nearly over, and the townsfolk were eager for the spring festival. Every year it was a time of feasting, music, and dance. Bakers kneaded their dough, seamstresses cut bright fabrics, and butchers prepared their finest meats. But when the mayor looked into the treasury, he saw emptiness. The coins had been spent, the coffers rattled hollow, And so he said, "There is no money for a feast. We must cancel." The people were stunned. The bakers cried out, "But the bread is already baked." The butchers protested, "The meat has been delivered." The seamstresses lifted their gowns and cloaks, saying, "The festival garments are complete." For the wealth of the festival already existed, in bread and cloth, in meat, in music. Yet the mayor saw only cash, he saw empty coffers, and declared poverty. The town split in two. Some followed the mayor. They locked their doors, hoarded their crusts, and declared that Golden Brook was too poor to celebrate. Others gathered in the square, feasted on credit, and celebrated the abundance already earned. And so confusion reigned. Those who looked only at cash saw famine. Those who looked at accrual saw plenty. Neither was wholly wrong, yet neither could persuade the other. Suspicion grew, neighbors quarreled, families dined apart. The winter dragged on. Snow gave way to rain, but the wounds lingered. The shoemaker who trusted only in cash found his cupboards bare, though his neighbors owed him for boots already worn. The farmer who trusted only in accrual gave away grain, only to find his bins empty when the debts were not repaid. Accruelia walked openly in Golden Brook that season, her two faces whispering in every ear. To one she said, "See, you are rich." To the other she said, "See, you are poor." And both believed her. It was only when spring truly came that the villagers understood the depth of their folly. The fields were ready, yet the people were weary and divided. Trade had slowed, trust had frayed. At last an old bookkeeper spoke up. She said, "Neither cash nor accrual is the whole truth. The mayor was not wrong to see an empty treasury. The bakers were not wrong to see a table already spread. But we erred in listening to only one face of the monster. We must learn to see both." The villagers began to nod. The shoemaker, the farmer, the mayor, the bakers, each began to see that their arguments had been half-truths. Slowly they mended fences, paid debts, and restored balance. Golden Brook's festival was held late that year, but it was sweeter than any before. For the people had learned a hard lesson, that cash and accrual are not enemies, but partners. One tells you what coins you have. The other tells you what wealth you've already earned. Only when you listen to both can you see the whole picture. And so, remember Golden Brook. Remember how a feast nearly vanished, how neighbors nearly turned to enemies, not because of famine, but because they mistook half the truth for the whole. Accruelia has not left us. She lingers still, but when you understand her two faces, you cannot be deceived. You can stand in the square, see the empty coffers, see the full tables, and know both are true. And in that knowing, you find wisdom.
The QuickBooks isn't broken. It's doing exactly what you told it to do. You just asked it to show you two different faces of the same business. Cash is one face, accrual is the other. They don't look the same because they're answering different questions. Let's break that down with some common confusion points. First, prepaid expenses. Let's say you pay your annual insurance premium in January, $12,000 all at once. You're on cash basis, January suddenly looks like a disaster. You've got this massive expense all in 1 month, and then the rest of the year look almost too good because you're not showing any insurance expense at all. Accrual doesn't see it that way. Accrual spreads that cost evenly across the whole year. It says, this insurance covers 12 months. So let's recognize 1/12 of it each month. On accrual, January doesn't look terrible. February and March don't look artificially inflated. The expenses match to the period it covers. Which view is right? Both. Cash shows what's literally left your bank account in January. Accrual shows how that expense really belongs across the year. Now, second confusion point, delayed payments. You finish a job in December. The client doesn't pay until February. Cash basis ignores December and January completely, then drops the income in February. Accrual says, hold on, you earned that in December. That's when the work was done. That's when it belongs. So December looks strong. February looks normal. Again, both views are valid, but they're telling different stories. And here's the trap. If you don't know which story you're looking at, you'll make the wrong decision. A business owner looking only at cash might think December was awful. I barely made anything. A business owner looking at accrual might think February was slow. I barely did any work. Same reality, different faces.
I'm not wrong. I'm simple.
And I'm not wrong. I'm complete.
Third confusion point, accounts receivable and accounts payable. Cash basis ignores them completely. If a customer owes you money, cash doesn't care until the payment actually shows up. If you owe a vendor, cash doesn't show the expense until you cut the check. Accrual shows both. It lists out receivables as assets because they're promises of money coming in. It lists out payables as liabilities because they're obligations you've already taken on. Now imagine you're trying to decide whether you can afford new equipment. On cash, you might look at your reports and think you've got plenty of money because it's not showing that stack of vendor bills sitting on your desk. Accrual would show those bills and you realize you're tighter than you thought. Flip side, if you're owed a ton of money and you're only looking at cash, you might think you're poor when in reality you've already earned a healthy amount. It just hasn't landed yet. So when I say QuickBooks isn't broken, this is what I mean. It's faithfully showing you the numbers through whichever lens you choose. The confusion comes when you flip between lenses without realizing what you're doing. One minute you're on cash, the next you're on accrual. And you think, these reports don't match, something's wrong. But nothing's wrong. You just seen both of Accruelia's faces.
Cash is clean. If it's not in the bank, it doesn't count. Easy, breezy, beautiful.
Simple, yes, but blind. You ignore the debts and promises you've already made.
This is why I spend so much time teaching this, because I've seen business owners lose sleep over this exact problem. They pull a report, it looks bad, they panic. Then they flip it, it looks good, and they relax. But they never realize they're being whiplashed by two different accounting methods. And here's the bottom line. Neither cash nor accrual is lying. They're just incomplete on their own. Cash is practical. Accrual is insightful. Cash tells you what's happening in your wallet. Accrual tells you what's happening in your business. If you mistake one for the other, you're letting Accruelia win. And the longer you let her confuse you, the more likely you are to make a bad call. Whether that's overspending when you're tight on cash or pulling back when that business is actually booming. And if you tell yourself the wrong story, you'll steer your business off course. Let's start with taxes. For many small businesses, cash basis is perfectly fine for tax purposes. The IRS even allows it up to a certain revenue threshold. Cash keeps things straightforward. If money comes in, it's income. If money went out, it's an expense. That's it. No need to worry about invoices you haven't collected or bills you haven't paid yet. Cash ties directly to your bank account, which makes it easy to explain and easy to track. But if you only ever live in cash, you can get blindsided. You might think you had a fantastic January because you collected on a bunch of December work. But if you didn't book any new jobs in January, your February might look grim. Cash makes you celebrate or panic based on timing, not actual performance.
Performance is mine. I show you the truth of when the work was done, even if the coins lag behind.
Now let's look at lenders and investors. Banks, investors, even potential buyers of your business, they want to see accrual. Why? Because accrual tells them how your business is performing, not just what's in your bank. They want to know, are you generating revenue when the work happens? Are your expenses lined up with the periods they belong to? Cash doesn't show that. Take a landscaper, for example. Spring is when they're moving out, or when they're out mowing lawns, planting gardens, doing the heavy lifting, but the checks might not roll in until summer. On cash, spring looks dead. Summer looks amazing. On accrual, spring looks like the boom it really was. Which one do you think the bank cares about when deciding whether to extend the loan? Accrual. They want to see your true performance, not just your cash flow hiccups. Or take an e-commerce store. On cash, sales don't exist until your credit card processor deposits the funds. That could be 3 to 5 days later. On accrual, the sale is counted the moment it happens. If you sell $10,000 in goods on Black Friday, accrual shows $10,000 in November. Cash might not show it until December. Which one gives you a more accurate picture of when your big push actually happened? Accrual. But does that mean cash is useless? Not at all. Cash is crucial for survival. If your bank account is empty, it doesn't matter how great your accrual income looks. You can't pay rent with promises. That's why I tell clients all the time, cash basis shows you whether you can breathe today. Accrual shows whether you're healthy in the long run. Ignore either one and you're setting yourself up for trouble.
Dismiss me, and I'll find another way in. Confuse cash and accrual, and I always win.
But when you see her two faces clearly, she loses her power. That is the way forward.
Here's another angle. Contractors and deposits. A contractor might take a $20,000 deposit up front. On cash, that looks like instant revenue. You feel rich the day you cash the check. But then you spend $15,000 on materials, pay your crew, and suddenly you're broke again. On accrual, that deposit is treated as a liability until the work is done. Only then does it become income. Which method keeps you from overspending? Accrual. Which method makes sure you actually have the cash to pay your bills? Cash. Or think about seasonal businesses. I once worked with a company that did most of their work in the summer, but their clients didn't pay until fall. On cash, summer looked like they were sitting around doing nothing. On accrual, summer looked like their busiest, most profitable season, which was true. Without accrual, they would have thought their business was failing in its strongest months. The danger is when business owners don't know which face they're looking at. They'll make decisions based on cash when they should be thinking about performance. Or they'll make decisions based on accrual when their bank account can't support it. Both mistakes can be fatal. So here's the takeaway. Cash is about timing. Accrual is about matching. Cash cares about when the money moves. Accrual cares about when the work happens. Cash is for taxes, for bank balances, for day-to-day survival. Accrual is for performance, for lenders, for long-term planning. The most successful business owners I've worked with don't pick one and ignore the other. They learn to read both. They use cash to manage their breathing and accrual to chart their path forward. They know that if they get confused, if they slip between reports without understanding, that's when Accruelia sneaks in, and they don't let her. You can't banish one face and keep the other. Accruelia is both. The trick isn't to choose between them. The trick is to know which one you're speaking to at any given time. If you're thinking about taxes, you're speaking to cash. If you're thinking about performance, you're speaking to accrual. If you're trying to decide if you can make payroll this Friday, cash is your answer. If you're trying to decide if your business model is profitable in the long run, accrual is your answer. Cash tells you what's in your wallet. Accrual tells you how you're really doing. Together, they tell the full story.
You'll forget, you'll slip, and when you do, I'll be waiting.
Not this time. With both faces known, you have nothing left to hide behind.
That's the real resolution here. Not slaying the monster, but understanding her. Once you understand that cash and accrual are just different ways of answering different questions, you can stop doubting QuickBooks, stop doubting yourself, and start using both perspectives to make better decisions. I've watched business owners go from panic to peace once they grasp this. They stopped asking, why don't these numbers match? And they start asking, which questions am I really trying to answer? That shift changes everything. Suddenly, the reports become tools instead of traps. And Accruelia, she shrinks. She loses her power because she only thrives on confusion. And that brings us to a close of this episode. That's episode 4 of the QuickBooks Wizard Podcast, Cash versus Accrual, explained not just as accounting terms, but as a story with two faces, a monster named Accruelia, and the wisdom to see through her tricks. If this cleared things up for you, I'd love for you to check the show notes. I've included resources and examples to help you apply this in your own business. And I've linked to our community because these conversations don't stop when the episode ends. They keep going, and they get even better when you join in. Remember, Accruelia may have two faces, but you only need one good understanding to run your business with confidence. Thanks for listening, thanks for learning, and I'll see you next time.